Hello, hi everyone. Good morning. Welcome to my YouTube channel. This is Luis here. We open pre-market right now. It's 9:15. Today is Tuesday, May the 7th, and we are looking at right now at Palantir and 1 minute chart, and we have this block and a buy at $22. Right now I was trading down pre-market 12%, and we have Weep Bull play, which I don't have over here. Let me see if I did it. No, we do. Let's bring to you guys. So that's our play on a Weeble. Okay, so what I'm seeing here is like the IV on this one. Let me see. It was 184, and the delta it's 10. So. And this one 194. So this IV go to 0, and this IV go to probably 120, and this probably is gonna go down to somewhere right. Let's say the IV here is go like here 120. I mean 100. Is it 120? 120. So I needed this go $22. Right now we only move at 12%. So 12. I mean, okay. So right now, pretty much like within 20%, because what happened was in the regular hours yesterday went up 8%. So then it dropped 12 right now between pause and pre-market, which is bring to 20%. But I don't know if they're gonna read that way. But say if you only drop 12% right now, so pretty much I'm losing $29 if we stay $22.10 at this price, because as you can see it on the if you look, let's go back over here. Okay, as you can see here on the 1 minute, we have like maybe 1-2 giant blocks plus the 2-1. But this 1 minute, this can go away if a lot of buy orders coming up and then fill it up the whole thing, and this all closed. But as of right now, as you can see it kind of like bounce on. Okay, let's put this up. Put this up. Put this up. Build some support at 22.05, but the pressure on the downside is bigger. So I don't know if we gonna have if this gonna be sustainable on the upside for today. I think it might continue in the downside. Let me see one thing over here, guys.
Pondering in terms of what is left for us in terms of making a life useful and interesting when the machines have way more intelligence than we do. It's not something obviously that we talk about every day. When it comes to AI at this point, as you might imagine, it was a big subject of any number of panels here, including one that I led yesterday with the leaders of AI at businesses such as Amazon Web Services and Salesforce. And there, Jim, a lot more constructive in terms of what they're already seeing in their business from the applications and the potential tools to use those applications in the enterprise. But then when you step out and you start to talk about some of the more existential questions, well, you get Musk on that, and that kind of goes along with a lot of things I've been talking about for the last year.
Look, the existential crisis is there. Let's say if you had someone who was teaching a class on Tolstoy, all right, and I had a year on Tolstoy. It was a
Sorry about that. I have some phone call over here that I have to answer. So I'm back. Took the CNBC with Jim Cramer talk about AI, Musk, and everything. So let's see here where we are right now. So yeah. So let me bring back the OptionsTrade calculator. So kind of like that's why we sit it right here. I mean, normally the problem is when you look the situation on the how can I say on the OptionsTrade, they give you like this. Okay, let me explain a lot of the situation. So yesterday, the implied volatility is at 189 because if you look at the contracts on the call side, it was 194, and if you look in a 184 on the put and 194 on the call, so making the average 189. But today, because the stock dropping 12%. And I think the implied volatility for this stock in a week was 14. So we're still below 2% below what we're supposed to be dropping on a pause, on a pre-market situation. So this go to zero, or the 194s go down big time. And so these contracts go to zero, I'm going to lose 100%. They're done $40. However, this one, we still, even like for the thin, I wouldn't make the mathematic over here. The math here will be 0.10 cents on the delta. Okay. And I multiply times whatever we have here in the percentage, which is right now, it's whatever we have here in a percentage, which is plus or minus 12. So saying that, I would say it's going to be 120, because remember, this go to zero, so the implied volatility is going to be, I mean, if you do like the average, the implied volatility realistically would be like here, okay, at 60%. Now, how we can see better is like this. We just excluded this one. We moved this to 120. That might be a bad idea. Okay. 120. 121. So saying that the contract, it might open at 37 cents for the put side, but we pay how much? Well, we pay 23, so we're gonna make 17, 37, so 14 cents, $14. However, this one was 41, so that's how much, that's how much we're gonna lose in it. $41 pretty much minus 17, so you're gonna lose like 20 some dollars. That's what I'm thinking that the contract will be. However, if it, I mean, open the market and the bear side continues and then drop to $20, the 19%, then we are profit. You know, as a matter, like So from this point on, we still need to see another 7% drop, which it could happen, because now the bull has to cover them side. I don't know how they're gonna do it, other than sell it, the calls from this point on. That way they can cover whatever they bought the calls for a high price. Other than that, I don't know. I mean, in let me see here on the day chart, we have a little bit of gap between the $20 and let's take all off, that way you can see better. Too much indicators here that kind of in that situation. I want to see it. Now this I can leave it. Okay, so we have this gap over here between 17 on the date chart to 20. So perhaps if we try to fill this gap over here, so we might gonna see say draw a line here, so that maybe this $20 could be a good support to bounce back from here. Right now it's 22.10, so maybe drop another, so it needs to drop another 10% to hit this and go up. If we hit this, we're gonna be good, because that's the way, that's what I'm doing. So this is the chart. I took everything out, just leave the, let's take this thing out. So pretty much like that's what we have, kind of like the support at 20.35, and right now it's 22, so another 10% to go down. So that means 22% for this stock, Palantir. Let's go back with everything. My analysis on this one, I shouldn't play, but I was looking at the other one, which is the Datadog, and it didn't show me much, but I thought would it be like a short position in this one, and because it was like in the day, it was very neutral with shorts over here and buy over here. And the weekly, let's see, the weekly was kind of like somehow bullish, and the 2 hours bearish, 1 hour bearish, 15 minutes bearish. So this would be my 3 indicators for earnings, and they are on the bearish side, even hit it here on the top, but I should play this one on the downside, 10% correction at this point. So we're 2 minutes away. Let's go back on OptionsTrade. Take a look. Let's reset. Let's go SPY. See if I can got any positions over here for today. SPY is going up. Support 517. What do I see? Like everything's on. Yeah, everything's on. We got less than 30 seconds, 4 hours. Yeah, we pretty much in the 4 hours. Am I gonna hit a 518 and then drop, or holding that? Probably Apple is moving up. That's the reason for SPY. It's going up. And okay, we're on. Refresh the page. Okay, we good. What? Oh, okay. Even worse than I thought. Even showing like a 13. 117 the volatility. 118. Oh, because okay. 12%. Yeah, that's more like it. So let's see here. Palantir. %11. Yeah. So do I have exclude? No, I don't. Yeah, we're going down IV as I predicted, 107. I first predicted 120. So open at 117. Stock movement going higher now. So it's moving this way. That's the reason the IV going down, because the put, it's losing 81%. And this is 127%, but this is 0. Print good candle, good support 22. So the bull's gonna try to push up. Take 1 minute. So I think probably like see that work. SoFi doing? Um, 7:15. 1 minute. SoFi, I have playing that. Save accounts. 167. 128. And this bounce here just like it's killing me. $10. 22. Microsoft. Uh, 50 points. Boeing. They don't. 5 minutes. 76. 3 minutes. Let's bring the CNBC.
What they are, I'm not even say they're scared, but certainly there's got to be concern, and you hear it from Musk,
Right.
in that things are moving very quickly. As I said, the rate of change is only increasing, and we don't know. We just don't know.
Well,
And
what
you can
Jensen would say,
you can have a very long discussion that is full of positives with many people who are the evangelical, who are the supporters of AI. But then at the end, you'll ask them, "Are you worried?" And they'll all go, "Of course I'm worried. Of course I'm worried."
well, I mean, what's really incredible, all you have to do is think about whatever we can do, whatever movement we can make, a robot powered by Blackwell will be able to do it better. That's what you have to think about, whether it be a 40-point game, whether it be a perfect game. It can pitch it and it can shoot.
We didn't mention that Goldman today taking NVIDIA to 1,100 from 1,000. Speaking of calls, Jim, a bunch of stuff in retail. B of A, Nike, US 1 list.
Yeah, I thought that was
Citi,
good.
upping, Gap, and Target. And next week, we get a ton of retail.
Yeah, I thought Gap's come down too much. That was a really great quarter. Target yields almost 3%. I think that's a cheap place to be able to get in Target. I still think that Costco is going to have best in show. No one's been talking about it lately. There is an overwhelming sense that when we see anything related to housing, it misses unless it has such value, Wayfair, or such prestige, Williams-Sonoma. But Williams-Sonoma is the outlier. I keep coming back to it and can't figure it out. Can't figure it out. Except for Laura Albert, it's a digital-first product. And maybe DTC, she's done it right, but she's the outlier. Almost everything else has got to have great value, or it doesn't work.
So next week when we get HD, Low, RH,
Those are
Best
trouble.
Buy, Chewy, Wolf.
Chewy keeps missing. Wolf, I don't know. Wolf, I do know that Home Depot and Lowe's, we got more people shooting lower again. Look, these are right in the crosshairs of why we need a cut, and there's going to be this gap where you say, okay, well, we can't buy Builders First Source, one of the greatest stocks of our time, by the way, top 5 S&P in the last 5 years. We can't buy it down 26 today because they didn't raise enough. Home Depot bought a company just to compete with Builders First Source. So we have to recognize that we're at that moment, that crunch moment where we need the rate cut faster than the stocks. Like if we had a rate cut today, Builders First Source would go higher, not lower. We need a rate cut. That's what this is about. I'm not a billionaire, but I still know what the hell I'm doing in some cases. Just in some. David.
Guys, did you guys see this partnership? It's not doing much for Uber stock. Instacart is up. Uber Eats powering restaurant delivery on Instacart. Doesn't do much for you, Jim. Let me just give you the quick headlines.
DoorDash, DoorDash is threatened
Instacart
by
customers, coming weeks, Instacart customers nationwide will be able to use the Instacart app to order from hundreds of thousands of restaurants powered by Uber Eats. It's going to be a tab, basically, a new tab, restaurants in the Instacart app.
Well, DoorDash was at one point down 10. Now it's down 2. Tomorrow, Andrew has Dara. So Dash will be down 7, and then it'll be down 3, because the people who are trading have no idea what the hell they're doing. But that's okay. That's okay, because no one's going to grade them. But yeah, that's what's happening with DoorDash. Down 10 at one point. Can you believe this stuff, David? Can you believe this stuff
maybe
is
at
happening?
At some point, you're going to have to start blaming the machines, because you're going to have to say the AI has no idea what it's doing, since so much of this is already algorithmically traded. The machines are already doing a lot of this. We talk so often about
Anybody
these
who can read
firms
Moby
so
Dick
much of
in
the
1
volume.
second knows what the hell they're talking about, David. Machine or human?
That's a good line. And in fact, it can. Right?
Yeah. Call me Ishmael, David. That's about as far as I could get in 1 second.
1 second. 1 second.
Well, what's Mnuchin going to say if you gave him 1
Jim?
second? What is he going to say?
Does it really get Melville in the way that you do?
Well, does it really matter what I get? You want to be really existential.
Jim, we didn't touch Boeing or Spirit.
Thank heaven.
Wider than expected loss, worse than expected free cash flow. Emirates, meantime, the CEO on the tape telling Boeing to, quote, get your act together. I'm not happy with Boeing. He needs to, in this case, he's saying you need to step it up on the 777X.
Wow. Spirit, by the way, barely down after being down very big on that incredible loss. There's this half of me says David Calhoun's making a lot of money, because that's the American way if you're a CEO, and it doesn't seem to have anything to do with what you do. And half of me says that Boeing is such a they came up with the B-29.
That was a while ago, right?
Hey, I guess, you're only as good as your last plane.
I can see what Boeing's doing there. We didn't really touch.
What to say. It's so bad.
It's fine. We didn't touch on Palantir. Revenue beat.
I like that quarter.
Raised the guide.
Jeez.
Not enough.
No, stock was at 25 yesterday. They got ahead of themselves. That Palantir still trades like a GameStop and like an AMC from the days of old. By the way, if you read the letter by Karp, it's quite good. Talks about his boot camp and how people learn to write. And now, there's an example. I'm not going to tell people to get in front of that freight train, but I thought that letter was terrific. It was coherent. It was why Palantir's a great company. The stock got ahead of itself, but I want to bank with Karp. I think he's a very bright man, and it wasn't a bad quarter, despite the fact that the stock looks like it is a bad quarter.
We didn't really touch on crude. Still circulating around 79. It looks like there is activity in Rafah. They appear to have taken control of one of the border crossings with Egypt. As these ceasefire talks yesterday were a mess.
It would be interesting if they opened the gate to Egypt, because Egypt doesn't want them at all. But I don't want to get too much in that. I do know that there had been a war premium, and the war premium has gone away. The Permian is pumping about 600,000 fewer barrels right now because of some different difficulties with pipes. David, oil is defying it. No one seems to know why oil's trading where it is, and we could ask Blackwell. Maybe that's what we have to do.
We'll be able to. In a not too distant time, we'll just be able to do that. And then eventually, of course, just continue this AI-themed broadcast today.
Does Ken Griffin get Blackwell
by
first?
our own avatars? He may.
I think so.
Sometimes I wonder whether he already is
Oh, he's an early adopter, Blackwell?
No,
when I saw
no,
Blackwell,
he's
I was
already.
I loved Blackwell, but there's
guys,
no
real quickly, I do want to get to one other piece of news this morning in the world of M&A. This is all Reuters reporting, but it has international paper shares up. They're reporting on essentially what appears to almost been a bear hug by the largest pulp manufacturer in the world. It's a Brazilian company called Suzano, I believe. I may not be pronouncing it properly. They have at least sort of broached the idea of trying to buy International Paper for $15 billion, but of course their bid is based on getting financing. It's already, again, all Reuters reporting, been rejected as inadequate, and it is trying to stop International Paper from buying a company in the UK, DS Smith, for $7.2 billion. So that happens. These things can be highly unlikely to actually get to the finish line. It does have IP shares up. You try to get the shareholder base to change, put pressure on the company to drop the DS Smith bid, talk to this other company, which apparently is willing to pay a premium, but you can see what it's done to the stock. Had been up even more than that, but I did want to note that. Again,
can
that's all reporting from
David, can you get Reuters to say that Nestle's going to buy Starbucks or PepsiCo? Can you get Reuters to do that?
I don't know that I can, but I'm sure somebody out there can plant that, and somebody would be happy to report it as a possibility, even though it's highly unlikely to happen. Would you like that to happen, Jim?
Well, my travel trust owns Starbucks, and I figured that this was a good time for you to ask me why we own it.
Well, why do you own it, Jim?
Well, I don't know, but my morale will improve when you stop beating me.
You brought it on yourself that time.
I'm trying to create something for Reuters, and you make it difficult for me.
Why,
Blackwell,
for some reason, you choose to continue to own it?
I'm talking to Blackwell right now. Don't bother me.
Let's see what Blackwell has to say about the bond market. Not a lot of data, although Kashkari's got an essay on the tape right now questioning whether or not policy is tight enough. Says that prices may be settling to a level above the 2% target. We'll hear from him at 11:30 a.m. As for the Dow up 50, Disney with about a 70-point drag. Back in a minute.
Okay, I have this other play you guys seen. It's called Play. Dave and Buster Entertainment. A friend might give me a tip saying they have a license to do gambling right now here in Florida, and looks like let's see over here. And now we're in the short positions. Everything's dragging down. 132 moving on my put. Let's take a look. Let's take a look over here on my save trades. 48%. So I think I made a video yesterday showing you guys the IV on this contract. The average is still going higher and higher. 136 right now. I'm 48%, 47% unrealized gains. Yeah, 46 show me 47 right now. Robinhood stock dropping. Going to earnings tomorrow, so the call was paying pretty good. Call, I was up. I'm still up in 89% on the call. Up $20 today, 4%. And I was down to put. Down $40 still, 23%, up $15 today at 13%. So the put contract, it's 18 cents the spread, So we have IV jump to 162 on the put with 362 open interest at 70 volume on the put side. Let's take a look on the call side. Call side, it kind of bounced a little bit right now, and the IV is 111, Zeta on volume, and open interest 332. What did I say in the call, in the put? 332, 362. So it's pretty equal. It might be today. It might be the day that I probably might be profitable in both contracts, because the put side, I just need another $37. The IV 162 for me to be profitable. So I might be holding on that position. Play sicking, going down. See if it hit the support. 1% down. 52 is the support. How many? 31,000 volume. Should have sell at open. Let's see here. Oh, put kind of jump. Because it's 0.4015 and the call is 5.15. So let's wait. This both are for 17, so next week. So I got time on this one. See how it goes. Yep. So I have 108. I got 94. It's too much. See here. Let's take a look at Airbnb. Airbnb has earnings today. I like Airbnb because also another big volatile stock. So it's kind of bullish on the straddle for 160 because the put is let me see here. Let's see if I can get Good. Let's make a calculator over here. So we got 875 divided by 932.93, which is bullish. Yesterday say higher numbers. It's 0.7 is neutral. Below 0.7, it's bullish, and higher is bearish. So let's take a look on the 17 next week. The 160. So you got 2,734 divided by 1,360. So we got 2. So very bearish for next week. that 160 contract, which is we trading right now little a dollar up at 160. So now let's take a look on over here from Airbnb. So Airbnb. So this is the intraday that I have. 1 minute buy, 3 minutes buy, 5 minutes neutral. I'll put this way. Now for earnings. Buy. 1 hour sell. 2 hours kind of neutral. Big buy position on 155. And 4 hours neutral. They become like kind of bearish. In the weekly, we are right in the trading somehow in the resistance. So market is kind of neutral today. Some of the tags, the three over here, that kind of move in the market right now. It's Nvidia, intraday. Let's see, we had to wait until like 10:30, pretty much, but it was a short hitting the support. Arm short, no support, and the 5 minutes, 3 minutes, a little support right here. See how it goes. I think ARM, it's kind of bearish scenario, but any play right now in here is just not good, you know. So ARM intraday, see earnings will be these 15 minutes on ARM, 1 hour. Show me anything right now. I only have the sell positions at 127. 4 hours. So this line is a gap. So this was 93. So the bottom that should be this line over here. See that 86, 87. Let's go back on flow. Live summary is Uber Rivian, $1 million. How much is it trading right now? 1050. Let's go live. Let's take this out. And let's go OptionsTrade website. And let's take a look on ARM. Okay. So right now, live ARM is very bullish. On the buy side and the sell side, very bullish. And the buy side, very bullish. So we got today, tomorrow for earnings. This guy got a strangle 105, 125. What is this? So he buy 105 put and he buy 125 call. Wow. So what's the? So I think this gonna go 35% and up, and 34% and a down. Big time. 200 contact, $200,000. I don't think this guy might be doing the same as what I'm doing, because he got right on the money for the put. You're just playing like outside call, but he was right on the money on the put. And also he do for August. Alright, so people thinking that they're gonna go up to 130. This one at open got 109 call. This one thinking it's gonna be below 210 for January 2025. Paid $1,000 for the $60,000. It's gonna really don't understand those plays, but that's okay. So intraday sell kind of bounce a little bit, and Nvidia try to drag the whole thing, going down at 2%. So the support's 885. $10. This is SPY. Kind of hanging in there. Let's see SPY for today. Maybe B's already. Okay, live SPY right now is slightly bearish. The sell side is bearish. The buy side is slightly bullish. Somebody just posted 518 put, 300 contract for today at 128. See if I have any YOLO. This guy 515 put, May 7, $26, 2,500 contract. How much? 26. See if this guy is right. Good today. He did that open 64. $10.01, 29% right here. He probably already sold it. Who knows? This guy not gonna think he's gonna hold all the way towards the end of the day. It's open. It's 515 put? No, come on. Yeah, 550, but it's a little bit too aggressive. You open at 64. Bye. And Nvidia is the one actually moving the market, and Apple too. Unless I'm thinking Tesla taking a dip. Took from here. Tesla. Tesla. Day chart. 4 hours. Two hours. Let's put Apple. It's moving 1% or higher. That's the reason. Kind of hold the SPY in a good position. Normally Apple has $190, 20, 87, 40, 85, 100. Then Federal 2.5%. Some date. $95. Chance of profit for him would be only from 1 hour. 2 hours.
Management team, which is really kind of regaining their footing with Bob Iger coming back, a new CFO in the seat. They had a lot of focus on that part of the business. And now we're in a bit of a lull, which the market knows as we're waiting for some of the new content to come online. But during that period, the parks was the business that people always would gravitate to with respect to their confidence, because it's just such a juggernaut and demand from consumers is so strong.
So I just want to understand here then, Michael, the guidance that seems to be pressuring the stock right now, I mean, is it a concern to you? Are you going to lower your numbers overall, or is the market making too much of it, in your opinion?
Well, I'd say, first of all, it's a concern. It's always a concern. And when I look at the guidance that they just gave me for the third quarter compared to where my numbers were before, that guidance is below my number. So I can't really say what I would do with my model, but those are the differences right there. It's absolutely a concern. Over the longer term, I still feel very good about this company and this business and the parks asset in particular. But we do want to make sure that we're being accurate in how we model what's happening in the macro environment. It's really, if you look at the comment that CFO Hugh Johnston made, it wasn't that he's seeing significant consumer weakness. It was a bit more modest, talking about post-COVID demand being a bit more moderated. So we don't want to have a sort of panicked reaction here. I'd also point out that even with the updated guidance and where consensus numbers are right now, remember, they took their guidance up for the year on earnings, even with this parks commentary. So this stock trades roughly in line, slight premium to the S&P 500. I still think Disney's an outstanding asset that's in the early stages of a transformation, and I love the idea of buying it at a market multiple.
Yeah, I think many people, if you had told them or at least given them the numbers from direct to consumer, would have been encouraged and perhaps thought the stock would be up. So clearly it's the guidance that's weighing here. Am I wrong in thinking, though, that the trends that you're seeing in direct to consumer are actually what investors would embrace?
Yes, but as with everything with Disney, it's a little bit complicated, right? So they had a strong direct-to-consumer subscriber growth number at the Disney Plus service in the quarter, domestically in particular. But remember, that number was boosted by a new agreement that they reached with Charter Communications to carry that Disney Plus service for all of their subscribers. So what the market is really interested in, what we believe investors are really interested in, is the core growth and the trajectory to that profitability that they've forecasted. And that's still a bit of a gray area. We need to see some of these new films come out and do well. We need to see them drive enthusiasm for the company at the box office. We need to see them drive continued enthusiasm for uptake of subscribers. And we need to see that move to the double-digit profit really materialize, whereas right now we're kind of still focused on just breaking even.
Michael, appreciate it. Complex cross currents, especially all across media. Thanks for the help today. Good to see you.
Thank you.
As we head to a break, let's give you a roadmap for the rest of our hour here. Some big interviews are coming up right here at Milken. Former Treasury Secretary Stephen Mnuchin will join me, get his take on TikTok, of course, NYCB, that big investment from his firm, and a lot more. Plus, we'll get a rare look inside OpenAI when we speak with the company's Chief Operating Officer, Brad Lightcap.
Keeping a close eye on Apple's big iPad event, which we just mentioned a moment ago. Big Show continues. A Squawk on the Street is back after this break.
then.
Welcome back to Squawk on the Street. Ferrari's moving lower this morning despite an earnings beat. Our Robert Frankens at HQ with more on the quarter. Hey, Robert.
Good morning, Carl. Those shares down about 3%. Now, Ferrari is sold out of all of its models for at least 2 years. Investors seemed a little concerned about the production being flat in the quarter. The company saying that was all due to some models being phased out and the new models just ramping up. Revenue was up 11%, earnings up 13%. So they're making more from the same number of cars, what CEO Benedetto Vigna calls value over volume. So basically increasing profits without growing production. The price of their new 12-cylinder car launched last week is $423,000. That's much higher than the previous value. And they're selling more of their $2 million Daytona SP3s. China was down, so they shifted more cars to the U.S. and Europe. They're planning to unveil their new EV and hybrid factory next month. Their first full EV is going to be unveiled next year. Already about half of Ferraris being sold are hybrid and half the ICE engines. Now, the new factory will also allow them to expand hybrids. This was a richly priced stock going into this print. It's trading at around 49 times forward earnings. That's about the same as Hermes, twice that of LVMH. And David, I know you love looking at market caps. Ferrari market cap now close to $80 billion. So it's 50% higher than GM's total value.
Yeah, it's always, it's funny. When we talk autos, which we often do, starting with Tesla, we rarely mention race. And, of course, I'm always interested in hearing about the company and always sort of stopped in my tracks by that 80-plus billion market value or wherever it may be right now. Robert, thank you. Up next, the man Sam Altman calls his secret weapon. Don't miss my interview with OpenAI's COO. His name is Brad Lightcap. Also had former Treasury Secretary Stephen Mnuchin will join us here at the Milken Conference. Squawk on the Street. We'll be right back. Big theme here at the Milken Conference, so we talked about it in the first hour of Squawk on the Street, has, of course, been AI. I had the chance to sit down with OpenAI COO Brad Lightcap yesterday. It's a bit of a wide-ranging interview, including a new tool that was announced just this morning by the company. It's called Media Manager. It's not going to be rolled out for some time, but the intent is to give content owners control of what machine learning research can be trained on. Take a listen.
AI is an interesting technology. It really, since basically the dawn of the web, we haven't actually had a technology that's, in many ways, I think, kind of redefined the relationship between content owners and publishers and technology providers. And so we're spent a lot of time thinking about what does that new relationship look like. We believe very strongly that there has to be a dialogue and a conversation between companies that train AI models and content owners and publishers. And so this is, our first step in what I think is the beginning of a dialogue as to how we think content should be managed, should be allocated, and ultimately kind of used responsibly for everyone's benefit in the age of AI. And so
what is this tool going to do?
This tool specifically allows content owners to identify their content and specify specifically how they'd like their content used with respect to AI training and further use. And so we think it's an important first step. It's not going to be the be-all end-all. There's a lot more work to do. And we still have a lot left to learn, but we think it's an important first step.
Is it your expectation that it will at least mitigate to a certain extent the calls of copyright infringement that certainly have been the case previously for the company?
Look, our goal is really to do right by content owners and by creators. And so ultimately we have to rethink that social contract. AI has tremendous potential. And in fact, a lot of the potential actually is benefit for the exact creator set that we want to work with in this capacity. And so finding that balance is our goal, and this is step one.
When is it going to be rolled out?
We're still working on it. It's an intake process for us of feedback and just learning about what exactly it is that we want to build. So we're targeting probably year after next, I think, to say it conservatively, but we're going to start that process soon.
Right, but what it would allow for is essentially if I'm a content creator and or any sort of media company, I can dictate what I'm okay with having your large language model use as data to feed it and what I'm not okay with. Correct?
Yes, and we've taken that step already in some ways. So we've released technology that, similar to the robots.txt exclusion, allows companies to specify how their content should be treated. This is just a step further on that path, and we're really excited for it.
All right, well, our viewers may not know you, but you are the COO, obviously, of the company. You say you spend a lot of your time figuring out how this tech, meaning generative AI, is going to get integrated into the world. What does that mean?
So OpenAI is a research and deployment company, and we sometimes forget about the deployment part of what we do. But really the way we look at it is this technology ultimately has to be useful for people. It has to be able to work inside of a business. It has to be able to help people learn things. It has to be able to help people manage their healthcare better. And that's a really hard problem when you think about it. In many ways, almost the research is kind of the easy part. The deployment part really is the tricky part. And so I spend a lot of my time thinking about what it is that businesses need to be more productive, to make their workforces more efficient, to use the technology safely in critical business processes. We spend a lot of time, we serve hundreds of millions of users. We spend a lot of time thinking about what it is that users actually want out of the technology, how to make it more personal, how to make them more productive. We, of course, think there's tremendous upside in education. So how do we build a better technology that helps people learn better in a more personal way? So this is just the beginning of this for us, but this is what we spend time thinking about.
We all remember when ChatGPT was introduced and it was sort of alone for a brief time. Obviously, you power other entrants as well, but whether it's Llama 3 or Gemini, any number of others that are obviously competing for that same enterprise customer. So I'm curious as to what wins here. Is it ease of use? Is it interface? I don't know. I'm curious as to what the conversation's like between you and the enterprise.
Yeah, well, it's going to be a lot of things. So like I said, the hard part is actually bringing the technology into the world and wiring it into the enterprise. The modern enterprise is extraordinarily complex. And of course, we want to be respecting of enterprise data. We want to be respecting of user privacy. And so getting those parts right is going to be critical to this. We're focused mostly on what we need to do to build the product layer on top of the research layer, the model layer. And we're excited for what we have coming this year in that regard. But it will be a transition. And so our goal is just to work with as many companies as we can in that process.
Yeah. Again, many people know that Microsoft has obviously provided a good deal of capital to sort of power the company. But given your ambitions, it would seem you have an endless need for capital. How do you meet that?
Well, look, we focus on what we control and what we need, and ultimately our goal is to deliver, the best intelligence at the cheapest rate. Sam used to have a phrase I really love, which is intelligence that's too cheap to meter, which is a really kind of elegant thing if you think about it. If you have intelligence that you can turn on, that's accessible to anyone, you can point it at any problem, and it can generally reason about how to solve those problems, that's a remarkable breakthrough for the world. And so we are going to need a lot of compute to get to that point, but we think the benefits are absolutely worth it.
But I guess, I don't know, and obviously it's a private company, part of it's a nonprofit, but can you give us some sense, though, in terms of whether you're generating free cash flow or what your potential needs are for capital going forward?
Well, yeah, so we think about it kind of in two veins, right? One is the systems that we build to train these models. These are incredibly large and complex supercomputers that we custom build. And the other is the compute that we need to serve the models, so the actual consumption of the models in a deployed capacity. And we're looking at both of these things. We do think the world is woefully underprepared for how much compute we will need on a longer horizon.
What do you mean when you say that?
Well, we think that there's just going to be a tremendous level of demand, and it's going to multiply. So if you look at really the fact that the models are going to get bigger over time, and so they're just going to need more compute to power. Two is we expect people to use them more. And then three is the models will ultimately be able to go off and be useful by using more compute. And so we think that that's an important thing to get right, and we don't want that to be the rate limiter on progress here.
No, but compute and power obviously mean electricity as well. You hear about that a lot. I'm curious as to how you guys think about it. Is there really going to be potentially a problem in terms of being able to power enough of the data centers to get to that compute level that you're talking about?
Yeah, this is an ongoing conversation. It's something that we have to start talking about now. I don't know if we are on the default right track or not, but I'd rather not wait and find out. And so we're starting to have these conversations in a productive way. The good news is I think the world wants to have this conversation, and so I think that the resources of the world will kind of align to figure out if there's a way to do this productively.
The company itself exists to advance OpenAI, its mission of ensuring that safe artificial general intelligence is developed and benefits all of humanity. I believe that's your... Do you believe you're still doing that?
I do. One of the things that's really remarkable about OpenAI is I was worried about kind of how diluted our mission would feel as the company got bigger. If anything, it's actually felt stronger, which is kind of counterintuitive. But I think the rate of progress in the field and the promise that the technology has, its ability to actually start delivering real impact in people's lives, not in like 10 years, but like right now, is really kind of galvanizing people to A, want to understand what it is that we're about as a company, and B, to help us deliver it. I think we get stories every day of how this technology... all things considered, and so we think there's only upside from here.
Of course, Carl, they continue to obviously say that they're focused on the safe part of their mission statement as well, not just the beneficial to all of humanity, although that's saying something. OpenAI is such a fascinating company. Obviously, it's private. It's got the for-profit part that controls ChatGPT, but it's run by that not-for-profit board, which is also tasked as well, Carl, with figuring out when we do reach artificial general intelligence. I don't know exactly, and Brad didn't really offer a great deal of detail in terms of how they're going to know when we get there. But that is something else that they're also tasked with, just so you know.
Yeah, talk about the boiling the frog scenario. I was curious, though, David, Eric Schmidt was on with Andrew on Squawk today from D.C. talking about an era in which we would be presented most of the time with intelligence not by a human being. And in Schmidt's view, he's like, I'm not afraid at all of that. As a society, we will adapt.
Yeah, that is the optimistic view, obviously, that we will adapt to it, that we'll understand, I guess, the deep fakes that are already present and are only going to get even more sophisticated and be able to somehow just deal with that. That gets to the safety issue, though, and the guardrails that so many have talked about and whether they're actually going to be there. By the way, also on the larger aspect of competition, obviously, is funded a lot by Microsoft, but also competes with it in other areas. Obviously, powers Copilot. Llama 3, which Schmidt mentioned as well, is seen as very powerful. It's open source from Meta.
As we're just about 15 points once again from 5,200.
The next level performance of M4, fast 5G cellular, a landscape front-facing camera, all in a jaw-dropping, incredibly thin and light design that's the thinnest Apple product ever. This is the iPad we've always dreamed of making. The new iPad Pro comes with double the storage, which is now 256 gigabytes. The 11-inch model starts at $999, and the 13-inch model starts at $1299. The new Magic Keyboard for iPad Pro is $299 and $349. And the new Apple Pencil Pro is just $129, an amazing value for such an incredible device. Customers can order the new iPad Pro, Magic Keyboard, and Apple Pencil Pro today, and they'll be available next week. Today, we're also making iPad 10th generation even more affordable. It's now just $349, making it a great entry point into the iPad lineup. We couldn't be more excited about today's announcements. They take iPad further than ever. Now, back to Tim.
We're so excited about this new iPad lineup. A more affordable, entry-level iPad with an all-screen design. The new iPad Air, available for the first time in 2 sizes. The remarkably thin and powerful, all-new iPad Pro. And of course, the small but mighty iPad Mini. This is the strongest iPad lineup we've ever had. It's the best in the industry by far. With these new iPads and the introduction of the powerful M4 chip, the big upgrades to Final Cut Pro and Logic Pro for iPad, along with the new Apple Pencil Pro and new Magic Keyboard, it truly is the biggest day for iPad since its introduction. From consumers to pros, iPad enables people to take their ideas, their work, and their creativity to new heights. We can't wait to see what users do with these incredible new iPads. And we look forward to seeing you next month at WWDC, where we'll talk about the future of our platforms and share some exciting details about what's to come. Thank you for joining us. Have a great day.
I don't think Apple put up a good presentation. I just cut the last couple of minutes. I try to figure that out. My son over here, I gotta figure that out why this not working properly. Maybe cable related situation. So right now it's trading at 182.
So stabilization, meaning this quarter shaping up to be, I think you describe it as a beat and hold.
Right. We got continued strong growth out of the mega cap.
So let's see here.
Look at the Mag 7 as an example. We continue to see the earnings growth expectations move higher. The other 493 are stabilizing, showing some early signs of improvement.
Bring
Under the
the
surface, when you look at it at a single stock level, we're starting to see more and more S&P 500 companies set up for a positive growth dynamic as this year unfolds.
So your year number is 245 on earnings, which you think is going to be okay.
Shouldn't be a problem. Shouldn't be a problem. Now, consensus is a little bit below.
Yeah.
What we're suggesting on the heels of Q1 is that the path higher still looks pretty good. We can see sort of 250 in our line of sight. A little bit harder to get to the 260 number that's been part of our, let's call it, bull thesis since the beginning of the year.
We have had some desks go to 250. You're not there yet.
Well, it's going to be one step at a time. We're preparing. We've been using 245 since last July, so we think we're sort of ahead of the pack in general in terms of this earnings resilience and improving strength call. Where we're looking to get is when we can get a little bit more significant upside to earnings growth, which is probably as you begin to look ahead to 2025.
You think guidance has been, as often the case, conservative for the year coming out?
Okay, guys, are coming tonight with results on Airbnb. And right now we're looking at Apple oil indicator in a 5 minutes intraday going short 182. Which am I pushing the? So let's open a short position here.
As for the Fed, the city or the House view has been 100, maybe a little bit more basis points and cuts this year. How do you think that has returned to consensus in some fashion?
Well, I think
there's a Fed put that's back.
Yeah, well, I think the data last week on employment sort of got the wheels back in motion. That hey, maybe we do get that mid-year fall timeframe pivot. House view is that essentially the pent-up effect of rate hikes to date is such that you should begin to see employment come under pressure. What I like to do from a U.S. equity lens perspective is just kind of draw this distinction between
a buy over here on
Main
Amazon.
Street versus
See
Wall
how it
Street. We
goes.
think the S&P 500 is beaten to a different drummer fundamentally.
Do you go along with the view that there are cracks forming at the lower cohort, for example?
I think there's definitely fraying around the edges, and particularly that lower end consumer, which is part of this be careful what you wish for out of the Fed. If you're a saver, you're in one place. If you're living paycheck to paycheck, you're in a different place. It's the same thing with S&P 500 companies. If you're very debt laden, you're feeling the impact of the higher rate circumstance. If you're one of the mega cap growth companies that's very free cash flow generative, you're in a different situation. So we have to be careful of how the impact of Fed policy is translating to Main Street as opposed to what we think is happening in Wall Street.
That's a good way to think about balance sheets at the corporate and the household level. Some similar echoes. Scott, thanks as always. Good to see you.
You bet.
Scott Cronin from Citi. David?
Carl, up next we have the former Treasury Secretary Stephen Mnuchin joining me right here at the Milken Institute Conference. We've got a lot to talk to about, of course, including the future of TikTok, given he has been putting together an investor group. Should the company actually be available, that is the U.S. and sort of global outside China assets. We're going to get the latest on that. As we head to a break, by the way, check out the results of our CNBC Generation Lab poll. We surveyed over 1,000 people aged between 18 and 34 about a host of topics. About the economy, the coming election. We also asked if the government should ban TikTok or leave it alone. And as you see there, 70% said leave it alone. We're back after this.
This Palantir, should I never play that one? Okay guys, thanks for watching this video and see you next time.